America's Commercial Real Estate Show is brought to you by Bull Realty. When your business requires proven performance, visit bullrealty.com. And Arnold Golden Gregory, a law firm that makes a difference. Visit agg.com. And Cone Resnick, providing forward-thinking advice to help navigate business and financial issues. Visit coneresnick.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. Welcome to the Commercial Real Estate Show. Thanks for joining us to lead, learn, and laugh. Learn market knowledge and best practices to lead your company's success. And that's whatever type of company you work with. And I think we always have to have some fun, right? Well, if you have a question or comment related to this show or any commercial real estate endeavor, you're invited to call us at 888-612-SHOW. You can also email us. The email is info@creshow.com. Or you can reach us through your favorite social media site. You can find them all at commercialrealestateshow.com. Well, today we're going to discuss the healthcare industry and medical real estate. You know, the healthcare real estate market is very interesting. You know, while it certainly did not go unscathed through the recession, it was more stable than most sectors. And now we have the aging baby boomers living longer, which is set to increase the need for healthcare services. We also have Obamacare set to affect the industry. So what does it mean for healthcare providers and for medical real estate? Well, today we'll pull the curtain back on the industry and the current market and look at what's ahead. Please welcome my first guest, Walter Page, Director of Research, CoStar Group, commercial real estate's leading provider of information and analytic services. Founded in 1987, CoStar conducts expansive ongoing research to produce and maintain the largest and most comprehensive database of commercial real estate information. Walter, thanks for joining us today.
Thank you.
And Walter, I'd like to get started with performance. How are medical properties performing year to date?
Well, you know, the medical properties are performing pretty much following the track that the office market is as a whole. They've experienced a declining vacancy trends since 2010, about 1 percentage point. And that's the same as the office market. But the key difference is that the vacancy rates for medical office are significantly lower than they are for the overall office market. They're at 10.9 versus 12.5. The other things that we see happening in the marketplace is net absorption, positive, which is always a good thing, although we have been seeing a slowing of the net absorption in the third quarter. For the year, we're averaging quarterly net absorption about 1.6%, which is 0.2% per quarter. That's slightly less than the 0.16% growth rate of the office market. I mean, slightly greater than the growth rate of the office market. So it's doing okay, but it's slowing. In particular, I think some of that could be the uncertainty related to the fiscal cliff and Medicare spending.
Yeah, that's interesting. So the occupancy has been about 2 points better for medical properties than office properties. And is that what you've seen since you guys have been tracking the sector?
Actually, since 2000, we've had excellent data, and medical office buildings have averaged a 9.6% vacancy rate, which is 2.2 percentage points below the office average of 11.8.
Okay. And so it's trending positive, and do you expect that to continue?
Yes, it is trending positive. We expect it to continue principally because the job numbers that drive medical office are exceptionally strong. If you look historically, medical or healthcare employment grows at a rate, or has historically grown at a rate double office employment. And office employment has historically grown faster than U.S. total employment. So that is one of the factors that we see that will continue to support the industry. Although we do see a little bit of supply risk on the horizon. Okay.
There might not be enough supply for the need?
No, actually, developers are a creative bunch, and they are, we have supply on the pipeline. Right now we have 6 million square feet underway, which is 0.9%. It's the lowest level that we've seen in a long period of time, but it's still a concern.
Okay. So you think developers should be cautious?
Yes, and obviously it depends on which market you're in,
Right.
and things like that. Markets that tend to have, ample supply of older people and limited amount of square foot per capita will tend to absorb that supply better than markets that have a lot of supply per capita.
Okay. And Walter, I know you study the office market around the country all the time. How has the forecast for medical office performance been affected by the Obama win? Do you see things differently moving forward?
Well, clearly the Obama win is good for medical office and national, because the national health care. So that aspect is good for it. However, we also have these discussions on the fiscal cliff, and the number one item that has been offered up is reductions in spending for Medicare. And so there's a lot of uncertainty out there related to this and the ultimate demand for medical space. But, even if you look at that, the expansion of medical services to the entire population and just the demographics regarding that are clearly very positive for the sector.
Okay. So you're bullish on the sector moving forward for the next several years then?
Yes, we expect it to continue to perform better than the U.S. office market, at least in terms of occupancy.
Okay. And what do you see for cap rates and investment sales volume on healthcare properties currently, and what do you expect moving forward there?
This is one of the areas that I think is an opportunity for investors. Historically, medical office cap rates have been 70 basis points higher than office cap rates as a whole, 8.2 versus 7.5. Now, we're tracking the entire market. Mm-hmm. That's like saying medical office buildings are 8% less expensive than a typical office building for the same level of revenue. And what has happened is that the institutional investment universe is starting to recognize this. A lot of institutional investors have created funds to track this, and the sales percentage of medical office has increased from 2% of sales to 11% of sales in 2012. Another thing I can tell you is that at NACREIF, which is National Council of Real Estate Investment Fiduciaries, where a lot of institutional capital is, they're actually considering establishing a benchmark to track medical office performance from an investment perspective. So it's clearly on the eyes of investors from both a very favorable perspective and just the liquidity that's increasing in the market.
Okay. So the current average cap rate for medical office is what?
It's about 8.6.
8.6. And so what do you expect that to do moving forward if the velocity of sales is moving up and these large funds are considering medical office as a better investment? What do you expect cap rates to do next year?
They should clearly compress, principally because they're at a very high level relative to historical, and also we see compression in the office sector as a whole, principally because your alternative investment, such as treasuries or BBB bonds, are significantly lower.
Okay. And Walter, what do you see as some of the advantage of the medical office market? Well,
to me, it's like a recession-proof or recession-resistant investment. It has good occupancy over long periods of time, and consistent occupancy performance is the number one driver of returns. The demand is great in that you have demographics in your favor with the baby boomers retiring and aging, and you have expansion of medical services to a broader part of the population. So I think those are the key prospects, and then obviously the favorable pricing of the sector right now.
Okay. And do you see less spec development in medical office than you do in normal office?
Actually, we see slightly more spec development in medical office. It's right now at 6 million square feet. That's 0.9% of inventory. I believe the national office number is closer to a 0.5 percentage point.
Wow, that's interesting.
And we see that actually within the office sector as a whole, a lot of the the development is not speculative. It's actually build-to-suit, and we have seen more speculative medical office type development.
Okay. And we're close to the break here, Walter, but what do you see as some of the challenges for the medical office market?
Well, the near-term challenge is obviously the fiscal cliff and the what happens if medical spending gets cut back by the federal government. That is the number one challenge. The other challenge is the supply risk in some markets, which could reduce the favorable fundamentals that you've had for the sector. Okay.
Well, Walter, thanks for your insight today. We sure appreciate you joining us.
Thank you.
And if you'd like more information from CoStar, visit CoStar.com. They have great information on the office market around the U.S. and about the medical office market. After a quick break, more healthcare industry and medical real estate intel for you. I'm Michael Bull, and this is the Commercial Real Estate Show. We'll be right back. America's Commercial Real Estate Show is brought to you by Bull Realty. When your business requires proven performance, visit bullrealty.com. And Arnold Golden Gregory, a law firm that makes a difference. Visit agg.com. And Cone Resnick, providing forward-thinking advice to help navigate business and financial issues. Visit coneresnick.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com.